Welcome back. So in this video, I'm going to talk to you about a sector that I think is both highly overlooked and undervalued with potential to rebound in the next 6 months. Now, mining, metals, and commodities are highly cyclical industries. When demand outpaces supply, prices increase, sparking investments in exploration development, and that leads to increase in supply. On the other hand, when supply outpaces demand, that leads to lower prices, prompting slowdown in exploration spending, and that leads to decrease in supply and subsequent increases in prices. This cycle repeats itself, creating long-term opportunities. Every single commodity goes through this cycle, which typically lasts 2 to 5 years. Now here's the best part. These downturns create long-term opportunities. By getting into a sector when market sentiment is weak, prices are low, we're positioning ourselves for long-term capital gain, especially for metals and commodities that will experience long-term demand growth. Now I believe it's impossible to time the market, but I believe this strategy has a higher probability of success. So the sector I want to talk to you today about is lithium. I did a video on this a few months ago. Since then, the sector has collapsed further, but I think the sector has become exponentially more attractive in the past few months. Let's start with a quick look at prices. As shown in the chart here, lithium prices are down 60% in the past 12 months to currently $10,000 a ton. The 5-year average is $20,000 a ton, and just 2 years ago, lithium was trading at $80,000 a ton. The sharp decrease in prices was due to a combination of softer demand from EVs and also increase in supply from lithium producers. With that, let me tell you why I'm more bullish on lithium than I was a few months ago. In the past few weeks, we have seen substantial pullbacks in investment within the sector. As I mentioned earlier, lower prices results in lower capital spending, and that leads to lower supply and subsequent increase in price. There were 3 developments in the past few weeks. Number one, Ganfeng Lithium, one of the largest lithium producers in the world, said that they're going to delay development of some of their projects. Number two, General Motors said that they are delaying a $330 million investment that they had previously promised to Lithium America. I think the biggest impact of all is that Chinese battery giant CATL said that they are scaling back its lithium production, and we believe this move could affect global production by 5%. Bottom line, I feel that these 3 points are leading indicators of a potential shortage of capital in the sector, and typically such scenarios lead to supply concerns. Now, the number one reason why I feel lithium prices are set for a rebound is that the cash costs or the operating costs of most of these development stage projects are in the $6,000 to $8,000 per ton range. On top of that, these projects need billions of dollars in initial capex to be advanced to production. So when you consider both OPEX and capex, we feel that lithium prices have to be at least $15,000 a ton, which is 50% higher than the current price for most of these projects to be attractive or feasible. Even when prices were $20,000 a ton, supply was not expected to meet long-term demand. So at prices at $10,000 a ton, I feel that there's no way the sector is going to survive at the current price level. Now, I don't know when the sector is going to turn around, but it's very clear that the sector will rebound. And that's why I want you to start looking at opportunities in the lithium space. In the video I did a few months ago, I mentioned some of our top picks in the lithium space. So check out that video if you're looking for specific stock picks. That's what I have for you today. If you like our content, please support us, subscribe to our channel, like and share. I'll be back with you in the next video with a new idea.